All right. Here we are. Welcome to the live stream. Happy Valentine's Day to you out there. Today, we are going to obviously recap some of the major news that has happened throughout the week, talk a little bit about what's happening on the charts, and also the changes that are here that are coming into the world, and really what to do about the falling dollar, right? We've had some more news about China basically moving away from the US dollar. We've also had some news about Russia potentially moving back toward the US dollar. And we also had some economic news coming out this week that gives us a little bit of a better idea of what may happen next with the Fed. All right. Here we are. How to check in on that. And so we're going to go over all of that today. I'm going to start off by just kind of doing a little bit of going over what's happening in the markets right now for anyone who is coming in, kind of let people get into the room. But right now, we've got the S&P 500 essentially moving sideways for quite some time. But there's more to this than what it looks like. Okay, so let's really quickly zoom out a little bit and look at this because, you know, the stock market is pretty much hanging out at all-time highs. If you guys didn't see, the Dow Jones hit 50,000, okay, this week. And I will let the rest of that go. But I'm hoping that you all knew that the Dow hit 50,000 and then unfortunately fell under 50,000 to the devastation of some people out there. But anyways, SPX really more obviously moving sideways compared to the Dow Jones. And the thing about that is that usually that means that, there's just indecision in the market. There's not a whole lot of excess supply or demand. And we're just, hanging out. But what's really going on under the hood here is worth taking a look at. And so I saw a tweet today that shows the 15 years of correlation between the NASDAQ and software. And what's happened here is this person, Deidre Bosa, is pointing out that we're seeing the largest divergence, between these two in history, or that we've seen in a very long time. So what this is here is the orange line is software, okay, and the blue line here is the NASDAQ. Obviously, we were looking at the S&P 500, but the same thing applies for the NASDAQ. Okay, same thing. Very sideways action since even back here in October. We haven't really moved. And so what she's pointing out here is that right now, there's even been a time right throughout 2018-ish to 2020-ish, software was actually outpacing, right, just the growth of the NASDAQ on its own. But right now, we had a huge drop off of software versus the NASDAQ 100. And I'm sure that a lot of us are aware of the fact that there was this huge news event over the past couple of weeks about how AI is going to be essentially displacing a lot of software usage, right? So everyone's concerned about whether or not software is going to be basically taking away the value of, if AI is going to be taking away the value of software. I'm just kind of trying to look at the chat, everybody. Welcome, everybody. Thank you, Robbie, for coming through. Welcome. So this is worth paying attention to. This is just one of the things that I wanted to say about the market, right? So obviously we're having what's called dispersion. We'll dive a lot deeper into this a little bit later because this is actually really important. Because what this kind of means as well is we've got the NASDAQ doing what it does and the S&P 500 moving sideways. But in between that, you've got certain sectors that are falling and you've got certain sectors that are rising. And this is what the definition of the word dispersion means in the market, right? There's the index can go sideways, but the difference between the winners and the losers can continue to grow. So moving on. Another part of what's happening here is that you've got big tech bond issuance flooding into the market, right? So we've been talking about this. It's been very clear over the past couple of weeks as we've gotten some earnings announcements from big tech that there is a large amount of expenditure that's going to be happening on AI buildouts. And now this right here specifically points out that we're seeing a lot more of bond sales, bond issuances coming from big tech companies. So they're issuing debt to be able to go out and make these investments. Okay, but moving on, it's not only that, right? So Peter Berezin out here, he said poof and it's gone, talking about the 4 quarter free cash flows of stocks, okay, of these major, excuse me, tech stocks, these hyperscalers, as many have called them. So we're seeing massive rollover in the free cash flows of these companies. But what's important to understand here is that this isn't really all that significant. Okay. It's not what it looks like. It's not just the profitability of these companies is just going to zero. These free cash flows are being invested. Free cash flow is the cash that a company generates after accounting for cash outflows to support operations and maintain capital expenditures. So you take operating cash flows and you subtract capital expenditures. And obviously, if you subtract the capital expenditures we know that these companies are spending, then yeah, their free cash flows are going to come down. Okay, so a lot of people call that out. Uh, like, what was the point of these companies having all that free cash flow? Right. So, anyways, just trying to point out a little bit of what's happened over the past week. We're going to dive into what's happening with crypto. We're going to talk about how that is also playing a role and what may come next. I just want to get some of this stuff out of the way. So total put call ratio jumped to the highest reading since the Liberation Day crash. Now, the put to call ratio is essentially uh, it's a measure of investor sentiment. So puts are you got calls and you got puts, and these are options in the options market, right? So a call option is going to give a holder, a purchaser of that option, the right to buy an asset at a set price. So I have the right to buy something at $100 and the price of it goes up to 120, then I can buy it at 100 and then sell it at 120, right? So the difference between those two prices is essentially going to be my profit. The $100 is what's called the strike price. That's the price at which I'm saying I would like for my option to be valid for. And now you have the opposite essentially for a put. Okay, a put gives the buyer, the owner of that option, of that options contract, the right to sell an asset at a particular price. So if I want to sell the stock at $100, then if the price of the stock goes down to $80, then now once again I can sell it at 100 and then buy back at 80, right? But the difference between those two is the value of that contract going higher. Now there's a lot more to that, of course, but we'll move on from there. So what the put to call ratio is here is basically it's a measure of investor sentiment because you're dividing the trading volume or open interest of put options by call options. And so put options are essentially bearish on the market and call options are essentially bullish. And so a ratio above 1 indicates that there are more puts being traded, which suggests bearish sentiment. So we're saying that right now, this is the highest ratio that we've seen ever since the Liberation Day tariffs. And oftentimes you might see a little bit of a crack in the markets around when the put to call ratio down here gets higher than 1. Okay. So just wanted to point some of this out. We've got some other news. Everyone, welcome in, welcome in. I see we have a super chat. Let me go ahead and address that really quickly. Welcome in, everybody. So super chat says, can you talk about SBET? SharpLink. I allocated over 3K and I'm down 55%. I don't want to sell at such a huge loss. What would you do? Okay. So guys, please refrain from, like, if you're going to do a super chat, let's not try to do specific stock tickers. Okay. We can ask questions, but I don't think it's right to just sit here and do a bunch of stock tickers. I don't think that's the right way of going about it. So let's see here. I mean, how could you have, where did you and why? Talk to me more about why you bought it. And guys, be kind here. Like, I don't know. It's hard for me to do an analysis. I can only look at the chart, right? So I don't know what the company is. I don't know what they do. I don't know why you invested. Let me know and follow up with a comment on your super chat. And then I'll come back to you on that. But what I really wanted to get into today was a couple of things that have happened this past week that are worth talking about. So look, we're living through, let me give you guys the Kim. We're living through a changing world order, right? We've talked about this over and over again on the channel. You've got BRICS nations building their own system for trade, and you see the value of the US dollar continuing to fall. You have China dumping US treasuries and buying gold, and this is starting to become more and more of a thing. Now, the question here is does the United States have a plan? Does the United States have a plan to counter the fact that people are trying to get away from US treasuries? You've got one of the things that the US has been trying to do is using tariffs. Okay. Tariffs, right? And the thing that I think about the strategy here is like, okay, last year you had the big slap tariffs on everybody, right? Okay, big slap everybody. If you don't come to negotiate with us, you're going to get these 100% tariffs on everything. We're going to double the tariffs that you have on us. What are you going to do? Okay, cool. We're going to come to the table to negotiate. We obviously don't want 100% tariffs. Let's figure this out. Well, the main thing that you actually get from that in general is that you kind of have to, you start to get an idea of, how would I say this? You start to get an idea of how am I going to respond to the tariff? Okay, so now the US is getting an idea of how people going to respond to it. Also, before the tariffs even come into place, but then the tariffs actually started to come into place. Right. And then it becomes a question of, well, not only how am I going to respond to the tariffs, but also what do these tariffs actually mean for me as a country? Because now the tariffs are actually in place. Now there's revenue actually being generated by the United States. And so if I'm China or Europe more specifically, and I'm seeing that this raise in tariffs is actually hurting my economy potentially dramatically, then now I'm going to respond a lot differently to these tariffs as they come in and out because I'm actually starting to see what this impact actually has. And so the US has been using these tariffs as a way to kind of like, first off, show you what's up. Hey, this is kind of what we can do. But then also, when it comes to this de dollarization trend, the de dollarization trend, what Trump also said during last year was, hey, we're going to actually, if you try to use BRICS, if you guys try to like go around the US dollar, guess what we're going to do? We're actually not going to be cool with that. What we're going to do is we're going to use 100% tariffs on you as a way to prevent you from trying to do that. And so the thing about that is that in general, this weaponization of the entire dollar system is what these countries are trying to avoid, right? This is the whole reason that they're trying to get away from the dollar. So if you keep on trying to use these weapons of sanctions and tariffs and all of this to try to do it, that could actually potentially accelerate the issue. So do the tariffs actually have the right impact on moving people towards the US dollar system, or does that create animosity and create even more of a desire to find a way out? So we'll talk a little bit more about the other things that the United States might be trying to do. But on Sunday, I believe it was, we had a specific announcement that we saw coming out of China around what they're trying to get their commercial banks to do regarding US Treasury. So let's go ahead and actually look at that really quickly.
Why do you think that China's issued this directive to banks to trim their exposure to treasuries now?
Morning, Lizzie. It's part of an ongoing saga of what China has been trying to maneuver. Where China wants to steer away from its dominance on the US, whether it's in investments or whether it's in industry. And what we are seeing is the former one, obviously. And it's an interesting story. It's a big ship turning around, but it's going to take, it will take place over time, and the moves will be gradual. If you look at China's holdings of treasuries, they were about 1.3 trillion about a dozen years ago. Now that's come off a lot, to the extent that their treasury holdings are only about 682 billion. So that's already less than half of what they had about 10, 12 years ago. And you know what the story talked about today was China directing its banks. It's not the state holdings, but the holdings held by banks, which are much less consequential to their whole entire portfolio. So I think that the reaction in treasuries has been muted, but it's a big story that we need to be worried about, which is one of China circling and diversifying away from treasuries.
China is moving away from these treasuries. And on Sunday, what happened was there was a specific announcement that started floating around the fact that they're actually trying to get their own banks to stop holding treasuries. So let me go ahead and pull up some charts really quickly as well around the actual data on what China's been doing from their central banking level around treasuries. Oops, that's not what I was looking for. So, everyone knows this, right? Everyone has been talking about this for the past couple of years. This is actually back in 2024. China's dumping US treasuries and buying gold. So this right here is a chart of China's actual holdings of US treasuries, which has continued to come down very drastically. Now, the obvious thing that's been happening on the inverse of this particular chart is that they're actually buying large amounts of gold. Okay. So, this whole trend that we're seeing in the gold, let's look at the price of gold real quick and let's talk about it. Because a lot of people are like, oh, gold, it's gone up so much, it's time to sell. And, the end of the story here. But we've got to really be careful because we've got a lot of different things going on that are putting gold in a particular place. And just really quickly, relative to Bitcoin, right? What's Bitcoin doing throughout all this? Bitcoin is getting absolutely hammered. I just want to go ahead and show that. Okay. Bitcoin is not in a good place. It looks like it might continue to go a little bit lower here. So just keeping an eye right there, just so you guys know, I'm not ignoring you. But with gold, okay, this trend here that we're seeing pretty much started, let's see, technically in 2015. Okay. Now, it getting serious started in 2023. We started to push out and make new highs. Why is this not going back further? I don't know. I don't like that. So, look, gold being in the position that it's in right now, where it's up drastically, it looks like this is something that has to end, right? This has to be over soon. But the problem with trying to look at what's happening with gold right here, right, in the price of US dollars, is that we're looking at a move away from the United States dollar. We're looking at a complete disassociation of the US dollar from gold. We're trying to literally stop denominating everything in dollars. So when we're looking at the price of gold, I'm going to play some clips about this in just a bit. Like this is not even the right way of being able to look at gold. This is just the devaluation of the dollar. This is the only thing that we're really seeing here. So I'm going to pull you guys up a couple of clips that I thought were very meaningful regarding all of this, from a guy named Luke Gromen. Okay, so Luke Gromen, let me know in the chat. Give me a 1 in the chat if you know who Luke Gromen is. Let me get you to the right part of this. 11:24. So shout out to Adam Taggart as well, because he has been doing this for a long time. He's very talented at what he does. But hear what Luke Gromen is saying about what's happening with gold right now.
Japan's problem becomes our.
So first off, this was also about Japan, right? He's talking about how the problems in Japan, okay, are causing the need for essentially everyone is trying to get out of US dollars and into safer assets, including gold. And he talks about how the issue with the Japanese bond yields continuing to rise is forcing people to have to make different moves with what they're going to do next. So I won't talk too much. Let me let you hear what he has to say about all of this.
Our problem here, right? Yeah, and I don't. I get the sense that this is not, a small to medium sized problem for us. It's a big one. This is one that not only will likely roil U.S. financial markets, global financial markets, but U.S. financial markets probably, disproportionately. But also, America's borrowing costs, right? The whole thing that we're desperate to try to bring down right now may indeed go the other direction.
No, that's right. And it's fascinating to me, amongst a number of different things. If you look at the 2-year Japanese government bond yield over the last 5 years and you overlay it to gold, it's the same chart. It's literally the same. They're tied at the hip. And so you've got Japanese people looking at this going, oh my gosh, buy gold. I don't, and at the same time in America, because we are we look at the dollar in the same way that the Catholic Church once upon a time looked at the earth as the center of the universe, right? Mm-hmm. And they shamed and tortured and killed anyone who said that the earth wasn't the center of the solar system. Americans think the dollar is the center of the solar system. And we torture and harass anybody who says otherwise, but we're wrong, anyone that does that. Americans are Googling how to sell gold with gold at 5,000 up fast into all this. The Japanese are looking at this and going, buy gold. And buy gold is the right reaction to all of this because it's a global, interlinked, sovereign debt problem that's accelerating.
Okay, so the sovereign debt problem is accelerating, which drives the flight to safety. And hey, where can I just protect my wealth? As part of the sovereign global debt crisis, you talk about inflation being the main means at which the sovereign nations try to combat the debt problem. It's really not solving it in the long run, but they're sacrificing their currencies, just the way that you said that Japan would, right? So again, those are all, it's buy gold to be safe and buy gold to protect against that. See a different outlook for it.
No, I think all roads lead to gold when you look at it, whether it's deflation, whether it's inflation. We had deflation with where we are. You quickly have credit risk to Western sovereign bonds, Western bond market, and that's not going to be allowed to happen. If you have inflation, obviously, and so really, gold is nobody's counter. No, gold
Yep.
owned in physical form or an allocated physical form is nobody has no counterparty risk, and that's basically one of the only assets that you can say sort of has that, a monetary asset certainly. So I think that's exactly what we're in the early days of watching, which is just this awakening to. It's not that they've run out of room to kick the can; they can always kick it further, but they can't kick it any further without really debasing the currency.
So that right there was a thing that is super, super important because this, what we're seeing with gold, once again, is not just a rise in the value of gold. You've got two things about gold. Gold has always, throughout history, served as a monetary asset, and it has served in some industrial use cases. So, with this monetary use case that we're seeing right now, where the value of the gold versus the US dollar is rising drastically, we have to keep in mind that the major thing is that all of the crises that could happen in the stock market, all of the issues that we might see, what is the typical response that the US government is going to have? If the stock market were to crash tomorrow, what's the US government most likely going to do? They're going to print money. They're going to turn on the printer. They're going to come up with some new name. They're going to come up with some crazy name. They're not going to call it QE. They're not going to call it quantitative easing. They're going to talk about how they're managing the reserves in the system. Okay. And they're going to go out and they're going to print money. And when they do that, it's only going to accelerate the trends, not only versus to get away from the dollar. Because once again, now you're going to print more money. You're going to debase the money again. Well, I don't want to hold currency that's continuing to go down in value. So if I'm a foreign nation, if I'm China, if I'm Japan, if I'm Europe, I'm Germany, I'm going to try to find another way to get out of US dollars. And there's only one place to go. Someone was saying this in the chat. They were like, well, what are we going to do? We're going to buy francs? Are we going to buy shekels? He said, US dollar will still the best currency worldwide. We're going to start holding yuan or shekels. Good point. Well, we actually might go to a form of shekels in the form of gold because that's the only actual answer away from the US dollar. So because of that, Luke Gromen kind of talks more in depth in that video about how he feels that all roads lead to gold. Whether you have just more inflation in the United States, it leads to gold. Whether countries are just continuing to diversify their holdings, it's going to gold. Okay, so I'm going to fast forward a little bit too to hear what he says about Bitcoin, because a lot of us here are like, well, what role does Bitcoin play in all of this? Because also that could be an important piece, right? We're seeing right now that Bitcoin's getting hammered throughout all of these times here where there's all of this uncertainty in the markets. So why isn't Bitcoin responding? Why isn't Bitcoin going up when everyone's de-dollarizing? Isn't Bitcoin supposed to be this major inflation hedge, just this huge de-dollarization hedge? Why is Bitcoin getting hammered right now? And a lot of people are saying, well, what Bitcoin is actually doing here, what it might be showing, is that we're actually moving away from it might be the fact that liquidity is coming out of the system. Okay, and let me try to show you guys a little bit of something around that as well. So the TGA, okay, this is the Treasury General Account. Let me see, that's the right one. Pretty sure that's it. Yep, has been going up since July 2025. Okay, so this is essentially liquidity coming out of the system is one way you can look at it. When the Treasury General Account is going up, it's because essentially they are soaking up money out of the system from treasuries. So the other side of this that we can always try to look at, oops, I missed it somewhere in there, is what's happening with the Fed's balance sheet. And the Fed's balance sheet has been rolling off technically for quite some time. Okay, but that's not even really the major thing. The major thing, the balances in the actual reserves of the banks is what I'm looking for here. So sorry about that. So the Treasury General has gone up and the reserves in the banking system have gone down. These two charts essentially move inverse with one another. And so since we've seen this huge withdrawal of amount of reserves that are sitting in the system since August 2025, that could have actually been a sign that what we were going to see here, right? When did that happen? When did Bitcoin top? It topped right there in October. Okay, so we can see that the liquidity coming out of the system might have a very, very direct impact on what's happened with Bitcoin ever since. This could be a leading indicator as well. Some people have said for what's going to come next for the actual markets as well. So this being something to keep an eye on for where, wait a minute, could that have been the leading signal for what's about to happen next with the NASDAQ, where we could see a much larger retracement due to all of the overbuying, the extremely pumped valuations that we're seeing and so on. But I'm going to skip a little bit forward to also see what Luke Gromen was saying about Bitcoin, because I do think that it's somewhat relevant to what's happening here as well. So that's going to be at 42.
People.
Perfect.
With that said, it is trading as levered tech.
Do you ascribe to, or what importance, if any, do you ascribe to Bitcoin and or U.S. stablecoins?
I still think Bitcoin can serve as a neutral reserve asset for the people. With that said, it is trading as levered tech, high beta tech. And I sold most of my Bitcoin in mid-November, in the mid 90s, thousands at 23, 24 ounces of gold. We sit here today, it's $70,000 and it's 14 ounces of gold. I think it's going below 10 ounces of gold, and maybe lower than that, until we get some sort of nuclear printing. Stable coins for me, I think.
And this is the other big piece of this, right? Because stable coins, right? There's got to be something about these stable coins that's supposed to be used as a way to step in, right? To keep people from continuing to dump all of these US treasuries. And we've talked about this over and over again. But the idea being that maybe, just maybe, the idea is to actually get people to come in and buy US treasuries, but not the countries, right? But the citizens. If you can get the citizens of the country to go out and get access to these permissionless versions of US dollars, being these stable coins, then that could be one way of trying to change things around, right? Now, it's not that I need China's government to want to participate, but I need these people to download VPNs and want to get these US dollar stable coins because they exist on blockchains. So you can't really stop them as easily from doing that. Now, that's a little bit of a stretch as to how much of an impact that would actually have. And so Luke Gromen also talks a little bit about some of this here. So let me go ahead and let him cook on
I think
this.
stable coins are a Hail Mary to try to save the treasury market. They aren't a silver bullet to do it. They're a Hail Mary to do it. And the thing that what I have trouble understanding is if you're an American or an American, in the American system, you can put your money in T-bills and make whatever you're making today, 3.5%. I don't know, whatever you're getting, 4%, 3.5%. Why would I hold a stable coin at zero? That makes no sense. Genius X says it can't pay yield. So
if you're in the U.S., I totally get it.
Totally doesn't make sense.
If you're in Indonesia, I get it.
If you're if you're in Indonesia or Turkey, but here too, if you go to an Indonesian or a Turk and you say, hey, do you want a 0% yielding stablecoin backed by a T-bill, or do you want a 0% yielding stablecoin backed by gold? I would bet you 9 out of 10, if not more, of the Indonesians and Turks will say gold. It's not even a choice. Like I saw an article, gold got killed here whenever it was 2 weeks ago, down $500 in a day, whatever.
Yep.
People in Singapore, grannies in Singapore, were standing in line for 6 hours to get physical gold. Take a number, go to the back of the line, wait 6 hours, get gold. Just culturally, it's just so different. And it reminds me a little bit of that scene in Something About Mary, right? Where they're like, the hitchhiker, the psycho hitchhiker they pick up, right? And he's like, I have a new idea. It's for, they said it's 8-minute abs, but I'm going to do 7-minute abs. And Ben Stiller's like, well, what if they do 6-minute abs, right? And he just flips out. And to me, the stablecoin thing,
what? 6 minutes abs? No.
Right? It's to me, it's the stablecoin.
That's a great
thing
scene.
for foreigners is like, okay, well, we're going to use stablecoins to enhance the dominance of the dollar system, and everyone in there, even Tether, is out there setting up a gold stablecoin.
Not only is Tether setting up a gold stablecoin, but Tether also buys gold to back Tether. Okay, so which is a crazy thing. Or you couldn't say to back Tether. You would say that they take their excess profits and they go out and actually buy gold. So Tether's gold stash tops 23 billion as buying outpaces nation states, Jeffries says. And this was just the other day. This was 5 days ago. So I haven't seen this article. I just looked it up right now, but let's look at this really quickly, right? So Tether bought an estimated 32 tons of physical gold in late 2025 and 2026. The pace of buying trailed only Brazil and Poland, with firms' total holdings now rivaling those of mid-sized sovereign nations. So now the thing that I want to point out about this, let's see. So Tether held gold as reserves to back the value of its USDT stablecoin. Okay, once again, they're buying it. See, I told you, they're buying it to back the stablecoin, and their gold backed XAUT. And their CEO disclosed plans to shift up to 15% of the firm's investment portfolio into the bullion. So now the point that Luke Gromen is making here that's really important is that these stablecoins, as they stand now, don't necessarily inherently pay yield. In the United States, we've got two different industries that are forming around this. You have the tokenized security space, where you have tokenized treasuries on platforms like Ondo, for instance, and then you've got these stable coins. And these stable coins are currently not allowed to pay yield. This is the whole holdup that's happening in Congress right now with the Clarity Act. Are these stablecoin issuers going to be able to go out and actually offer yield on these stablecoins? And if so, right, that's going to create a radical change in the whole banking system, right? Because if these stablecoin issuers can offer this yield, then there's going to be a lot fewer reasons why you'd want to necessarily hold your money in traditional analog dollars in a traditional bank account when you can go out and have all of this programmability on top of your money and get the yield that you're paying. But right now, what's happening is a company like Tether, for instance, is getting all of this money from people. They've got all of these stable coins out there in existence, and they're taking these stable coins, and they're taking the money that they're getting to issue these stable coins, and they're going out and they're buying U.S. Treasuries. But when they're buying those U.S. Treasuries are paying a yield. They're paying a yield of 3.5% right now. That 3.5% yield is going all into their pocket. It's all straight profit. Okay, so if all that money is going into profit, then they're like, well, I just got a bunch of cash. What am I going to do with this cash? I basically have a treasury of all this cash that's coming in, and they're going out and they're buying gold. Okay, so let's look really quickly at the market cap of Tether. Okay, so Tether is sitting at a market cap of 183 billion. This is also worth noting that Tether market cap has stayed really strong throughout this recent dip. If you really look at it, right? And I don't even know what to think of that. I guess it's not right, because usually what you might see is so value comes out of the crypto market, but the actual transactions are going into stable coins, right? To save their value. They're selling crypto into stable coins, which usually could provide some lift. And really what you would look at is the stable coin dominance to try and measure that. I don't know if that's actually what I'm looking for. Stablecoin dominance. I think that is it. Okay. So stablecoin dominance rising throughout this time. So that actually does make sense, because more of a percentage of the total crypto market cap is actually in stablecoin. So that's kind of what I wanted to check on right there. But anyways, point being is that if all of these stablecoin issuers are able to just pocket that yield, then they're going to have to make a decision with what to do with all of that money. They don't need to hire employees. Tether's like apparently one of the most profitable companies, right, per employee. Let me see if we can find that per employee, because they don't have to do anything. They're just operating essentially, guys, as a bank without having to pay any yield. And so since they don't have to pay any yield at all whatsoever, they've got the choice now. They've got optionality with what to do with that cash. And what are they doing? They're buying gold. And they're saying they want to get up to 15% of their entire investment portfolio in the gold. So if Tether is buying gold, then does it really make sense to buy these stable coins? And now the big thing that these banks are trying to fight against, once again, is that if these stablecoin issuers can offer yield, you might get deposit flight. But the problem is that stablecoin issuers and banks offer different services. Stablecoin issuers aren't necessarily lending out money to people. Okay, so but banks, that's a big part of their business model, is offering loans. So if stablecoin issuers aren't offering loans, but they're soaking up all the deposits, then you might see a decrease in the amount of loanable funds. So banks are right to be concerned. And the US, okay, is very, very much so on top of this. And the way that this ties in is because there clearly is some sort of a plan, all right, that the United States has around using cryptocurrency as a way to maintain its global dominance over the world. We've heard Secretary Bessent talk about using stablecoins as a way to maintain the dominance of the dollar. We've also seen just the huge need to be number one in crypto, right? So let's go ahead and listen to the president actually say this over here about this as well. Let's see. Oh.
I only care about one thing. Will we be number one in crypto? Crypto has turned out, and in that sense, I've been right. Crypto's turned out to be a massive industry, if you want to call it that. And I'm very proud to say that we are far and away ahead of China and everybody else. Now, China's getting into it very big right now. If you want to go after people, you're going to kill that industry, and it'll be very bad. Tremendous number of jobs. I campaigned positively on crypto, very openly. I campaigned. Biden campaigned against it. When Biden found out that I was getting like 100% of the crypto vote, which was a lot, he switched totally, and he went in favor of crypto. They went totally in favor. They had many people under indictment. They let them all go. They let them all go. You know that. Many people were under indictment. Biden was a corrupt president. Biden went all in on crypto at the very end because he thought he could get some votes. It didn't work. They voted for me. I want to make crypto great for America. That's the only thing. I don't want to have somebody else have crypto and have China be number one in the world in crypto, because in crypto, it's a kind of an industry where basically you're going to have number one and you're not going to have a number two. And right now, we're number one by a long shot. I want to keep it that way. The same way we're number one with AI, we're number one with crypto. I don't want to keep it that way.
So all the stuff in the middle is whatever. The point here is that the U.S. is clearly trying to be number one. We saw some really cool comments from Dan Morehead as well on this global arms race to buy crypto. And we actually just saw some announcements from Brazil. Let me actually play that first, or find that first, because I thought that was fascinating. Okay, so everything that a lot of these pro-Bitcoiners have been saying is starting to become more and more true. We're seeing more and more sovereign buying of these types of assets. So Brazil just introduced a bill, to acquire 1 million Bitcoin as a national strategic reserve. Okay, now that's obviously a very, very ambitious thing. And the introduction of a bill doesn't necessarily mean anything. Okay, let's be clear. But this is something that legislators around the world are talking about. It's not just here in the U.S. We also had the U.S. getting ready to introduce a bill to go out and buy more Bitcoin.
On the Hill, there's the Bitcoin Act that Senator Lummis had introduced. There's going to be a new bill introduced by Representative Begich in the House that builds upon that and allows some of the necessary authorities to centralize, properly safeguard these assets, and then explore budget-neutral ways to add to that stockpile. And then in the future, ultimately, if Congress decides to move in that direction, to allow for us to potentially add to that with outright purchases. But that
outright purchases of Bitcoin, not just holding what they already have, but looking to get involved. We had Treasury Secretary Scott Bessent this week in particular coming out and talking about how he thinks this is important. But let me also play what Dan Morehead said a couple of weeks ago, because this was also really important.
I think there will be a global arms race for Bitcoin within the next 2 or 3 years. Countries like the United States are establishing strategic Bitcoin reserves. Countries that are aligned with us, like the UAE, are acquiring cryptocurrencies, Bitcoin.
So right now is an important moment because Bitcoin is in the gutter. All right. And it's probably going to continue to go lower. I'm not going to be surprised by that. But what everyone is watching out for, what people are trying to watch out for, is what is going to be the next reason that the U.S. government is going to have to print money. What's going to be the next excuse? Okay. You've got Kevin Warsh coming in. He's supposed to be trying to get assets off of the Federal Reserve's balance sheet and trying to also potentially lower interest rates at the same time. So lowering interest rates is a little bit of an easing kind of a mechanism, but the Fed's balance sheet is extremely high. This is another thing that I wanted to talk about today. The Fed is actually the largest singular holder of U.S. debt. And so let me go ahead and show you guys really quickly. So the U.S., this is the Fed's holdings of all securities, of all U.S. Treasury securities, U.S. Treasuries specifically. All right, cool. Now, that number has fallen precipitously since 2022. Okay, they've been rolling off these treasuries off their balance sheet. But most recently here, we've had a major uptick from 4 trillion, from 4.1 up to 4.2. So nothing crazy. Let me say that a little bit more calmly. If you really look right here, right, it's not that big of a thing. But the problem is that this is a reversal of that trend. And this is mostly, I believe, from that short-term treasury bill purchasing, okay, that Jerome Powell introduced back in December. Okay, so we've got like $40 billion a month coming in. Nothing crazy that's happening right here just yet. But it is a reversal of this trend of rolling assets off of the Federal Reserve's balance sheet. And this is something that if it continues to go higher, if we continue to see a rise in the balance in the balance sheet of the Federal Reserve, this is going to mean more and more money coming into markets. Really, just more and more money into the entire overall global system, which will make its way pretty quickly and swiftly into markets. So the Fed is actually one of the largest holders of all U.S. debt. And let me go ahead. It's the largest singular holder. I had to double check on that because it was like the largest single holder of U.S. Treasury debt is actually the Federal Reserve itself. So let me try to find you some of the documentation around this. So this right here is from the Peterson Foundation. It's a very cool institution. It's a think tank, essentially. And this is a little bit older, I think, but this goes through all of the debt makeup of the United States. So this talks about here, what is the difference between the debt held by the public versus by the government itself? And the government itself, in this case, does not include the Federal Reserve, I believe. I believe this is not that. So the public holds 80% of federal debt. And more than 2/3 of the public debt is held by domestic holders, right? So the Federal Reserve System, as you can see right here, at 4.5 trillion-ish, right? A little bit less than that now, I guess, or a little bit more than that now. I kind of forgot what the number actually was. 4.2 trillion of just U.S. Treasuries alone. 4.5 is 4.2 trillion dollars. So largest holder, you got mutual funds after that, depository institutions, and then you start to see these countries, right, like Japan at 1.1 trillion, United Kingdom at 779 billion, China 765 billion, right? And that number, as we've been talking about, has been decreasing. Okay, so the Fed actually holds the most debt, and now this is something that ties back into this whole conversation because Scott Bessent was kind of talking about some of this the other day. He was talking about how essentially he's not too concerned about the idea that countries are trying to dump U.S. treasuries. He's like, look, they can dump treasuries, whatever. I'm not too worried about that. But someone at the Deutsche Bank, Jim Reed of Deutsche Bank actually said, hey, this is the one thing that the U.S. actually has to look out for, because although the Fed is the largest holder of its debt, they still are actually getting some of its financing from these other countries. So there is the fact that the Fed is not as sensitive to the interest rate, right? Like the Fed, if it's going to buy U.S. Treasury debt, it's going to buy it at whatever rate. In fact, it's going to try to buy it to get the rates to come down. Now, whereas these other holders, these marginal buyers of U.S. debt, being these foreign investors, they might actually not want U.S. debt at certain interest rates. And so if the interest rate doesn't rise, then they won't buy U.S. debt. But if the interest rate does rise, then that's also a really bad sign, right? It's meaning essentially that there is a falling demand for that rate. So let me go ahead and try to give a little bit of extra context on this. So another thing that happened over the past week here was that we got some notification that Russia was apparently coming back to the US dollar system, and that they were very cool with apparently finding some way, right, to come back to the US dollar system. I'll show you the actual tweet itself. So breaking, Russia's considering moving back to the US dollar as part of a wide-ranging economic partnership with President Trump, according to an article that ended up coming out on Bloomberg. And this partnership would include the US and Russia working together on fossil fuels, 2, and joint investment in natural gas, 3, offshore oil and critical raw material partnerships, 4, windfalls for US companies, and 5, Russia's return to the US dollar settlement system. They said if finalized, this deal would change the global economy, and that's from the Kobesi letter. Now, I saw this other article on Substack that was really nice, because I'll show you what ended up coming after this. But this was out of nowhere. People are like, what are you talking about? Like all of a sudden, Russia's going to start working with the U.S. and use the U.S. dollar. The whole thing is that BRICS, Brazil, Russia, India, China, South Africa, and all of these other ones like Indonesia as well have been moving away from the U.S. dollar system very intentionally. They don't like the U.S. And so they don't like the way that the U.S. is monitoring and keeping control over the monetary system. So why would this happen out of nowhere? So this guy reports on this. He says, yes, on Thursday, one of America's best known legacy news agencies reported that the Kremlin has set out proposals that could see Russia embrace the dollar in a partnership with the Trump administration. Some of this apparently also about the talks to ending the war in Ukraine and so on and so forth. And so he goes over those details and whatnot. He said, what's actually happening here, this reads like a fairy tale for a man who likes beautiful stories. A president called Donald, who enjoys big numbers and the promise of a place in the history books. Everything Bloomberg reports here sounds inflated, burnished, theatrically plausible, and practically improbable. After years of deliberately digging trenches away from the dollar system and building bridges with China, a rising superpower with a long memory, that Moscow shares a gigantic border with, by the way, it strains any rational belief to think the Kremlin is suddenly preparing to march back because one administration in Washington might be receptive, especially when Trump can't even run for another term. De-dollarization was an expensive and stubbornly pursued slog. You don't reverse something like that with a glossy memo and a firm handshake across a polished table, unless you're desperate or you've lost the plot. So what does make sense is the signaling. Float the vision and make a back to the future offer without obligation. Keep the other side nodding along and massage their egos. Don't forget to tell them their boss absolutely deserves a Nobel Prize. So the point is that he immediately said, this doesn't sound right, something is off. And it actually came out a little bit later in the week that this was not necessarily what was going on. There was a report from the Bank of Russia essentially saying, hey, no, that's not true at all. What are you talking about? And then I will show a quick video of that as well. So the Bank of Russia, this is a news agency, Russian news agency site. Bank of Russia not taking part in talks on return to dollar payments for exports. Now, once again, this is also just their central bank. Okay, this memo that apparently came out was not necessarily from the central bank per se. It was coming from the Kremlin itself, right? So there is technically a separation, just like if Fed Powell came out and said, oh, we're not talking to Venezuela about the capture of their president, whatever, about oil, whatever, you know what I'm saying? Because it's technically a separate thing. But also, we have to keep in mind that in other countries, the way that their systems work might be more integrated. And Russia actually have no idea how it works. So this is her actually saying this out loud in Russian. So, but she basically is saying, hey, this is not something that we're participating in, even if that were true technically, right? That's something worth noting. So let's see here. So another thing is, look, this trend toward de-dollarization is happening. The question is, what does that mean for other assets? And so let's hear something that Ray Dalio has been saying about this as well.
There is the loss of confidence in the reserve currency, which drives people to see alternative storeholds of wealth. So, for example, when there's a debt issue, there are two ways of dealing with debt. There's hard money, traditionally backed by gold. And when that happened, then there was breakdowns in that monetary system, the valuation. So for example, classically, March 1933, Roosevelt, with the debt problem, was forced to go off the gold standard, printed a lot of money, devalued the dollar, and then it moved on. In 1971, we had the same. Nixon did the same thing, went off the gold standard, and devalued and so on. And the creation of a lot of debt and money means that money goes someplace else, and it traditionally, both of those cases, it went into stocks, gold, and other places. So money is always the holders of money, which are the holders of bonds. Bonds are a promise to receive money, a lot of money over a period of time. It's a very long money position. And when those become unattractive, such as now, let's say, you get zero interest rate or close to zero interest rate or even a negative interest rate, and there's a lot of creation of debt and a lot of printing of money, that drives that into other assets.
So that's a few years old from what I understand. And so he's talking about when interest rates are super low, right? You've got to find another place to put that capital. And so, well, where would you put that capital in a situation like that? And what's about to happen to interest rates right now, right? We're very likely to see interest rates continue to go down. So look, there's two sides of this coin. What I'm really trying to point out here is that when we're looking at the de-dollarization trend, we're continuing to see that is going to probably be a big part of the story this year. We're going to see something. I would not be surprised to see something massive happen, all right, with how countries are actually moving away from the US dollar. Now, is that going to be about Bitcoin? Maybe. Is that going to be about gold? Maybe. But my point here is that I outlined this, I think, in the most recent couple of videos, is there's two things to look at. What's going to be the most likely thing to benefit from what's happening with de-dollarization, and what's going to be the fastest horse in the race? What's going to be the thing that actually gets us the most juice for the squeeze? Because you could just look at the stock market and say, oh, well, AI companies are going to continue to go up. Technology is going to soar throughout this time. So I don't mind, right, not having my dollars. I just don't want to be sitting in dollars. I'll just buy stocks. Okay, but stocks might not actually really outpace some of the growth in other areas. Technology stocks might not be the best answer, right? Because you might be seeing countries doing drastic actions to pull money out of the US markets. Now, the only way that I really think that that truly properly makes sense is if countries actually coordinate together. But even then, like, where's all the growth going to come from in the world? The growth is still technically coming out of the United States. I got to say it. Like, there's no other place in the world where there's actual true growth happening at scale, right? Now, does that mean that it's impossible? Not necessarily. I don't think that it's impossible for you to see some of this type of growth in places like Africa. I don't think it's impossible for you to see this kind of growth in a place like Latin America. But I do think that it would be really, really hard because of the strength of the American consumer as well, right? The high-end consumer spending at the levels that they're spending at. There's not many places where you can launch a product or service and actually immediately get real consumption of that thing. I mean, just think about what's happening with all of these AI products. You've immediately got not only the retail consumer coming in and using that product, but you also have businesses that are adopting that extremely rapidly. So, obviously that is a global phenomenon, but we got to talk about where is the money? Where is the spending even happening? Where is the habit even of the spending? And that's something that's really hard to compete with in the United States. So the point that I'm trying to make here is that I don't think that stocks are going to necessarily do poorly. I think you could see some periods of time where stocks underperform and that they pull back in the markets. I think we might be due for a little bit of a pullback in these markets. But I think that over the next 5 to 10 years, if we're looking at a secular trend, I don't think that technology stocks are not performing throughout that time. But do I think that there might be opportunities to find better bets as far as what will move further faster? I think so. And do I think there are more sure bets that might do well during the next 10 years? I do. And so my kind of breakdown, my thesis here, and we've kind of gone over this before, is that when it comes to the physical materials that are going to be needed to continue to go towards the AI build out for one, and then also this de-dollarization trend, I think that gold stands a really good chance to be one of the for sure bets of where to park paper in these times. None of this is financial advice. I'm not a financial advisor. Don't take financial advice from a random guy inside his house talking to a wall. But when we're thinking about where to hold and save and preserve in these types of times, let's pull up the gold chart again real quick, because I think we're underestimating what the price of an asset like this looks like in a world where the denominator that you're looking at, the thing that you're using to measure it, is falling precipitously. Now let's look at the dollar index as well really quickly, because I also think that this is the important part of the story that most people, right? Most people, I'm not saying you guys understand this, but most people don't understand this part. Okay. What's happening right here is no joke. And we've already seen the president come out and say that he doesn't mind this, and they're trying to lower interest rates. Come on, man. They're trying to lower interest rates, which means that the value of the dollar can also continue to fall precipitously. Okay. You don't want to hold dollars in lower interest rate environment. If we see the dollar fall to levels like 80s, these 80s kinds of levels, 80 on the dollar strength index versus, let's see, back in 2021, we were back here. Like, that's not that crazy. But if we see that happening, it's going to absolutely accelerate what's happening with gold and silver. And it could eventually end up leading to a support for what's happening in Bitcoin as well. So we just got to be really careful with looking at the overall trend here. The peak of the dollar was in September 2022. Okay. And there's a chance, and that's for this regime, right? If you look at the dollar index back in '01, you had a really strong dollar back then as well. But we've gotten down here into the 70s. These are drastic moves. Last year, we lost over 10% of the value of the dollar index. I'm going to be honest with you, the way that this chart is looking, this is a reaccumulation. This is a entry. This is an opportunity for me to say, oh, I would like to regather myself right here and add to this position. I'm adding to this position right here, right? Of this dollar's heading lower, brothers and sisters. So that's what I'm looking at. And this is something that can play out over, once again, 5 to 10 years. Where is the dollar going to be in 5 to 10 years? It's going to be a lot harder, right, to try and come up with what that's going to look like. But as it seems, as the trend is, not only is the dollar falling versus other currencies, we're seeing the dollar fold versus precious metals. And we've seen the dollar be lower, right, in times where precious metals were not this high, right, versus even just looking at the gold versus even the SPX, right? Look at gold versus the S&P 500. This is really one of those things that you want to kind of look at as well, is how elevated is gold versus the S&P 500? How many shares of S&P 500 can you buy for an ounce of gold? And when you look back in August 2011 was when we had a major peak, and that made sense. You had a huge run up in gold. But, these levels get crazier. And so I'm going to look at this. I'm also going to pull up another couple of things about like looking at where does gold actually sit when we look at history, right? Like where in history can we look at the value of gold versus other things, right? We can't just keep looking at gold in terms of dollars. So let's pull this up really quick. I thought this was a really cool one. This guy is looking at gold versus the total U.S. debt, right? So gold is about to be larger than the United States debt of $38.5 trillion. And that is what a global monetary reset looks like. So this is just the market capitalization of gold, right? How much for each ounce of gold that is in circulation times the price. What do you get? You get the market capitalization of gold at $36 trillion. Okay. So this right here hasn't even passed that just yet. That's just one thing to look at. I'm not saying that that's super relevant, but it is something that's worth talking about. Now, I've got another one for another Adam Taggart. Somebody said that these guys are a doomer channel. Well, the thing about a doomer channel, any doomers right now, guess what? They're on point. All the doomers, you have been vindicated. Let me leave a 1 in the chat if you're a doomer. Leave a 1 in the chat if you've been preparing for a moment like this because you've been buying gold and silver for the past decade, right? So anyways, this guy right here is talking about the U.S. gold reserves as a percent of government debt. And I thought this was super fascinating as well. Now, obviously, this is really intense. Okay. This is very intensive a way of looking at it. But U.S. gold reserves as a percent of U.S. government debt back in 1975, you had gold representing 18% of the U.S. government debt. 18% of the U.S. government debt was actually held in gold reserves, right? Versus that. Yeah, let's go. Let's go with all those ones in the chat. I love it. So at that point, if right now, looking relative to the U.S. government debt, if we had gotten up to just an 18% valuation of U.S. gold reserves versus government debt, by the way, we're assuming that we have all the gold reserves. I know that's another thing. You're talking about a $26,000 gold per ounce. Now, obviously, that's insane. And obviously, we're not expecting gold to necessarily just teleport to $26,000 an ounce. Okay. But just an example of trying to look at, right? Like, where are the other ways of trying to measure where gold is at and what's happening? We can see that on this chart, there is an uptick of what percent of U.S. gold reserves there are as a percentage of government debt. Now, the problem here is obviously the fact that the U.S. government debt has been rising dramatically, right? So it's really hard to try and directly look at this and say that this is the fair way of looking at things because the debt has gone crazy, right? But let's just do the mental exercise, okay? Let's just do the mental exercise. U.S. gold reserves as a percent of government debt in the 1940s, late 1930s, you had 51% of U.S. gold reserves compared to the debt at the time. And now when you look over and you try to extrapolate that out to today, I know, listen, I'm not saying this is what is going to happen or what has to happen. Please do not bank on that. Please do not. But what I'm trying to say here is that we got to look at different measurements. This one says at 51% of the US debt, that's a 75,000 per ounce dollar value of gold. So now this guy, he sells an investment product in gold miners. Okay, so he is a mining expert. Okay, he goes out and buys mining companies and creates these deals and structures. Okay, so he's very bullish on the commodities market. I want to caveat that I'm not a huge I don't know this guy. I've just listened to him on this podcast. I think he's providing very important and interesting data. Let's see if we can find him out here. I'll give him a follow on Twitter. But point being, there's other ways of looking at this. And when you look at things from that lens of like, okay, where are we at versus the S&P 500? Where are we at versus, for instance, the gold reserves and the amount of debt that the United States has? When we look at it that way, is a $5,000 gold all that crazy? Is this huge rise in the value of gold all that crazy? A 245% rise in the value of gold? I mean, what about the rise in the US debt, right? Like the US debt has risen at an incredible level. So is it really all that wild to think that there's going to be a reaction to that? Is it really that crazy to think that the world might be saying, hey, like, I'm going to respond to that. I'm going to respond to that by getting away from these US dollar assets, such as US treasuries and potentially even US stocks. And I'm going to put that money in gold. Now, obviously, the stocks equation is a little bit different because you're talking about growth and you're talking about revenues. Gold doesn't have revenues, right? So we got a super chat. Callio Pepioni. What circumstances have to happen for the government to confiscate private gold holdings? Well, the problem with that is that there's nothing has to happen. They can do that right now. To be honest, I mean, people could have a fight. I think Congress, just out of a blatant hate for the current president, would be like, "No, you can't do that." But this is a real concern, and this is something that, for instance, a man like Brian Armstrong would be very vocal about. He would say, "Hey, by the way, this is a great reason to be coming over here to this side and talking about Bitcoin instead of gold, because it's a lot harder to confiscate it." I mean, it's hard to confiscate this stuff anyways. I don't think that that's really an easy thing to do, but you could make it illegal, and you could make it illegal to own Bitcoin as well. You could at least make it illegal to own Bitcoin in a a hardware wallet. There's so many different things that could be done to try and make that happen. But yeah, I mean, technically, like that's the legal precedent, is that there is in law, technically through common law, through what has occurred, yeah, they can confiscate gold. They can make it illegal to hold gold, or make it to where you have to turn in your gold or whatever. Like, that's just something that could happen. I'm just gonna be real with you. I'm going to open it up to the chat a little bit here. I'm going to find a couple of more things to keep an eye on, really just talking about Bitcoin. Because, guys, okay, so that was my point. I wanted to wrap up the point of, you've got gold. I think this is just a for sure answer. Now, getting involved in gold requires strategy because of the elevation of the price, right? We're talking about a very elevated price. So once again, we were talking about this a couple weeks ago. What were you doing back here? What were you guys doing when I did a live stream back here? Right? Because a lot of people are freaking out right here. A lot of people are like, oh, it's over. Okay. And what's gold doing? It's hanging out. Don't get me wrong. But if you look at that weekly chart, ladies and gentlemen, that is a perfect retracement. Perfect, beautiful retracement. All right. Now, silver, on the other hand, made a little bit of a lower low. Okay. So silver said, hey, I don't know how I feel about that. And we got to remember that gold technically is leading silver. Okay, so silver didn't move for quite some time. It didn't do anything for quite some time. So what were you guys doing back here is the real question. Because these types of moments, if we pay attention, they're not necessarily going to happen that often. You'll get them, but that's not going to be when you want to buy. No one wants to buy right there. No one wants to buy back here. No one wants to do that when you're seeing that. But at the end of the day, if you want to participate and go, you definitely don't want to be buying up there. You definitely don't want to be buying when it's taking off and going to crazy levels. So just saying, I'm going to start talking a little bit more about like the psychology of investing and stuff on the channel. I'm going to try to change some things up and see how you guys respond to more of like the philosophy of money. Like, what are we trying to do here? What's the point? But, just saying, like, yeah. And someone says, hey, I can see this correcting down to 3,500. And once again, the question is going to be, if that does happen, 3,500 back here, what are we going to do? Yeah, I don't think that's unreasonable that at some point you come back down to these kinds of levels. The question is going to be, what are you going to do? And this is why, it's very important to also not just go all in on stuff. I was listening to another Adam Taggart. I forgot the lady's name. She's awesome. And she's like, everybody's living in a 0 to 100 world. And this is just happening in everything, right? We're seeing it all over the world and everything. It's like you're left or you're right? There's no in between. There's no nuance. There's no nothing. You're on or you're off. And the problem with that is that that's just not conducive, especially to in making investment decisions. You don't want to make investment decisions like that. You don't have to, at least. It's either you hate Bitcoin or you love it, right? It's either you're a huge doomer or everything's peaches and roses and the market's going to go up forever. And it's like, we always want to be positioned. And I can't remember where this was, but this guy, he pointed out a really cool idea. He was like, and this is what he says Ray Dalio approach kind of is as well. It's like 25, 25, 25, 25 on a portfolio, right? And this is aggressive, right? This is a protective kind of portfolio. And it's like 25% gold, 25% stocks, 25% bonds, and like 25% real estate. And I forgot, this like went back to like, there was somebody it was like in the Dutch Empire or something that had a portfolio like this. And that's where apparently Ray Dalio kind of got his ideas from, of how to kind of like be protective of the wealth that he's built and eliminate what they call the tail risks. Meaning when you're looking at a bell curve, you've got the tails, right? So you've got the normal distribution, and at the end you have the extreme good events, and you have the other end where extreme bad events can occur. And so what you're doing by having a 25, 25, 25, 25 portfolio is that basically those tails won't affect you in any way, right? Like if something goes down by 20%, you're kind of still protected to some degree. If something goes down by or up by this, you'll get some gains, but you won't be completely wiped out. And so anyways, just talking about that. Yeah. Someone said, hey, I'm not buying gold right here. And that's also cool too, right? Like you should also just know, right, where you're going to get involved or not. That's a much better approach than, when it's down, I'm going to buy, when it's up, I'm going to buy, or whatever. Either you dollar cost average and you just let it happen, or you say, well, I'm going to set a limit, right? I'm going to have a limit where I'm willing to get involved. And the best investors in the world, they have those limits. And when the price finally gets there, they might have to wait years for it. It gets there and then they make their move. Now, and then there was something else you said. It said Bitcoin is also going to continue to fall. Well, Bitcoin might continue to fall. In fact, I'd be betting on it. But what am I doing though throughout that process? Like, you see what I'm saying? Like, and I'm not saying that this is not what you're doing either. I'm not saying that, but what am I doing while Bitcoin and crypto continues to fall, ladies and gentlemen? I'm gonna let y'all guess. But that's how it works. So anyways, the other thing, copper. We talked about copper quite a bit on the channel. I'm not an expert in copper. That is something that could be the faster horse in the race. You got Bitcoin and you got copper. Copper for the safer people, Bitcoin for the people that are like young and they love it and da-da-da-da. But, and it's not just copper, by the way. There's other minerals. There's other minerals that are having these structural deficits that you want to look out for as opportunities that you would have to do a lot more research on, because this is not something that I do a lot of research on. But I also just wanted to point out that the White House had an official come out and say that trillions of dollars are waiting for the Clarity Act to pass in order to start investing in crypto. We've had some comments from some of the largest banks in the world around crypto and digital assets right now.
The landscape of finance or digital finance is at a tipping point. So tokenization and digital assets are about to move from pilot into mainstream. And at Standard Chartered Bank, we have been a leader in this area. In my mind,
You're talking about Standard Chartered Bank, guys. This is one of the largest, most relevant. This is like it's like the J.P. Morgan of Europe, if I may. So let's see. And maybe that's not the right way to put it, because maybe they're not even just really Europe. So despite being headquartered in the UK, it does not conduct retail banking in the UK. And around 90% of its profits come from Asia, Africa, and the Middle East, to be clear. So, goes back 172 years, 1853. All right. So this is pretty much like the JP Morgan of the UK. So anyways, they're big on this digital assets revolution. The White House in particular said, let me see, there was a particular thing that he said. He said, Executive Director Patrick Witt says they're working hard on passing the Bitcoin crypto market structure legislation. There are trillions of dollars in institutional capital on the sidelines waiting to get this into place. Okay, so like the prices of crypto going down and all of this and that is something that is, just recognize that we're in a place where there might be some alpha being generated in the way that things are moving. So even Scott Bessent is coming out on CNBC and talking about the Clarity Act and how important it is. Why is the Clarity Act so important? Why is it so important? We've already got the Genius Act. The stable coins are there. He said they're going to use stable coins to maintain US dollar dominance. Why do they need the Clarity Act so bad? What does that mean?
The overall crypto community. So, in a time when we are having one of these historically volatile sell-offs, I think some clarity on the Clarity Bill would give great comfort to the market, and we could move forward from there. So it's very important to get this done. And I think if the Democrats were to take the House, which is far from my best case, then the prospects of getting a deal done will just fall apart. I mean, look what the Democrats did to crypto under the Biden administration. It was almost an extinction event, and President Trump has worked to make the U.S. the digital asset capital of the world. There's a lot of innovation that goes on adjacent to crypto in the blockchain, in DeFi. So I think it's important to get this Clarity Bill done as soon as possible and on the president's desk this spring.
They want to get that bill on the president's desk in spring. The SEC chair also very adamant about getting this done. He says that it's long overdue. So anyways, just a couple more things to talk about on the news. We had the jobs report coming out this week. Obviously, it came out a little bit stronger than expected. You also have seasonal adjustments. Okay, so the expectations are a lot lower in January. Why? A bunch of people get hired in December, right, for holiday season, and then they go away. Okay, so you have seasonal adjustments that sometimes make the expectations lower. And so when you have revisions, but beating the expectations means that you've technically done, it's just understand that there's also some seasonal adjustments that are happening in that labor data. We also had the CPI coming in. The CPI came in a little bit less than before, but by like a little bit, let's be clear. But another thing that I did want to point out in the news that came out this week was what was going on with X. Okay, X money is coming out in the next couple of months, potentially.
For X money, we actually had X money live in closed beta within the company. And we expect in the next month or two to go to a limited external beta, and then to go worldwide to all X users. And this is really intended to be the place where all the money is, the central source of all monetary transactions. For X.
So X is looking to be the super app, right? They want to get to 1 billion monthly active users, and I think they're at about 600 million right now. I think what's happening with X Money will be very interesting. There's a lot of speculation about it. For my Ripple people, I will pull up what I saw on an article that made it to Yahoo Finance. Basically, Elon Musk reveals X Money may launch soon, fueling some crypto speculation. There were some people who were talking about, well, first off, so people are saying that this is going to lead to a huge opportunity for crypto. And he's trying to make this thing something like China's WeChat, where you've got everything going on in one place. Now, if X Money involved crypto, that'd be amazing. But what we're saying here is that X Money has never confirmed that crypto will be used as a payment option. Investors, meanwhile, continue to build their own narratives. The first speculation centers on Dogecoin. The meme coin closely aligns with Elon Musk's personal brand. The theory stems from his past comments suggesting Doge could be suitable for micropayments. This is a video of him saying that. And then the second involves XRP. The hypothesis is linked to Cross River Bank, a financial partner working with X to process payment flows. Since 2014, Cross River Bank has integrated Ripple's protocol to enable real-time cross-border payments between US and Western Europe. Despite these narratives, Doge and XRP prices showed no significant reaction to the news of X Money's upcoming launch. In the coming months, once X Money officially goes live as planned, its impact on crypto may become more clear. So, yeah, someone was saying Mr. Beast is the younger generation. I love that. I love that. Because Mr. Beast has also been making some moves into the financial services financial services industry as well. Pleasure to have you here, Purple Rain. Purple Rain, that's a cool name. So just wanted to point that one out as well. That's basically a lot of the news that happened over the past week. Also hope that you got something away from the looking at how things are changing and how to kind of try to be positioned for this as it comes. Crypto's going down. Everyone's going to be like sad and mad and upset and not paying attention to crypto anymore. And it's going to be really important to like these times when crypto gets into the bear market, it gets to where you start to question everything. You're like, I don't even know if this is real anymore. Like maybe everyone was right and I'm crazy. And there is always a chance that everyone's right and you're crazy. But time and time again, what has happened so far, just empirically, you can't get mad at me for saying it. Empirically, the prices have come back and you make new highs, you create new bull markets, and things go on. So someone said something about AI agents being something that will save crypto. I think that's an important point. I just saw a clip about that as well. I don't think I actually saved it anywhere, but I did see something about that on X about how AI agents will continue to be. I mean, we've talked about this all the time, that AI and crypto cannot be separated. There are two parts of one story here, and Coinbase has been very forward about even creating standards that make it possible for crypto payments to be settled. AI agents to be able to settle transactions using cryptocurrency. I'm not finding what I was looking for there, but definitely something to keep in mind for sure, that there will be a massive, massive, massive use of crypto for these AI agents. They are going to have their own commerce platforms, and the most efficient way and effective way of doing that is through having programmable money that exists on something like a blockchain. So, guys, I'm going to open up the chat real quick. If you guys have anything that you want to discuss, for sure, if you want to leave a super chat or if you just want to chat, let me know. I can see you here, and I'll do my best to answer any questions that you may have. So I'm going to do this for just a few more minutes. I appreciate you all joining me live. I'm going to be doing this again next Saturday at 2 p.m. Eastern. And yeah. Facts, agents don't understand the dollar, but they understand stablecoins and crypto, said Cross Central. Well, yeah, I mean, it's just that our systems are not built for that kind of commerce, right? Like even person to person, we just got Zelle, a few years ago. And even that doesn't like settle in real time. We're talking about the ability to settle payments in real time. So the banking system today, it settles and clears, day through day. Like it takes days for things to actually settle and clear throughout the banking system. So there's a huge, huge need for, even in our traditional payments, to speed them up and make them more efficient. So most definitely, when you're talking about agents that are going to be able to commit these micropayments back and forth all day long, they need to have their own economy, right? And that's a lot of what the world might look like. Charles Hoskinson, by the way, if you're here, just so you know, if you're here, you get to know we're having Charles Hoskinson on Memes and Markets next week. So if you haven't already, go ahead and subscribe to Memes and Markets. I'm going to go ahead and pull it up so that you guys know to subscribe to Memes and Markets. You guys get the alpha because you're here with me live. So Memes and Markets, we're going live every Tuesday and Thursday at 12 p.m. Eastern. Go over here. The link is in the description of this. Go and subscribe to us over there. Do it, especially if you like this live format. We're having incredible conversations, and we are going to have some incredible guests and just also continue to talk about what's happening in the world as well as what's happening in the crypto markets. So, let's see. Yeah, so Zell, look, Zell, from what I understand, doesn't settle actually immediately. You get the money immediately, right? Because they know with each other, like, yo, we're good. We're operating within the same system here. We're all Gucci. But I don't know that it actually fully settles in the back end immediately. I could be wrong about that, though. I could be wrong. So, like, yeah, I know, impressed me. Actually, I 100%, like, that's something that, so she said, impressed me, said more women guests. Yes. Well, we we would love that. I think a part of the issue is that we don't attract that vibe as much, which is fine, but we will continue to push. We will continue to be very intentional about that because there has not been one on yet. And so we'll make it happen. No doubt about it. So, oh yeah. So the point was Charles Hoskinson. So I was talking about him because he actually, oh my goodness. Okay, we will address your super chat in just a second. Charles Hoskinson talks about how he has this vision for the internet where essentially we will have our internet and then there will be the bot internet, right? Which will potentially be much larger than our internet, which already there's this thing around like 50%. 50% is, wow, that was super messed up what somebody just said. 50% of all interactions that are happening on the internet, but potentially right now are already bots anyways. So just imagine when the bots are actually communicating with one another. If you guys have been paying attention to what's been going on with Moltbook, for instance, where they've got this Reddit of just bots going back and forth with each other. But eventually, like his whole thing is he knows that that can actually turn into a real platform where like commerce is taking place, where these bots and agents are interacting with each other on behalf of their owners. So anyways, let me go ahead and address the super chat. So Yvonne Simoni, okay, I got you. What's your outlook on Algo? Well, listen, we talk about this a little bit inside of, actually, no, I haven't talked about Algorand. I've never talked about Algorand on the channel. Let's talk about Algorand real quick. Algorand is an incredible project. Silvio Macaulay, who is an MIT, I think even professor at some point, definitely, yeah, let me back up on that. Silvio Macaulay is also like an award-winning computer scientist. Okay, so he's won the Turing Award, and he created something, I think, in the privacy world. Algorand is one of the only properly, truly quantum-resistant blockchains, and I only really understand that to some degree, okay, because you've got quantum resistance that needs to happen on different levels. Quantum resistance on the blockchain level, right? The actual security mechanisms of the chain itself. You have quantum resistance of the transactions that are happening on the blockchain. And then there's other ways in which you need to have quantum resistance as well that I'm actually not super familiar with. But when it comes to Algorand, there's kind of like the talk around the fact that it is a ISO 20022 token. It's compatible with that standard, that messaging standard, right? When it comes to Algorand, there's a few things that I think, oh my goodness, that's crazy, y'all. We are in a tough time for any crypto holders. The one thing about Algorand that I will say is that there might be a lot of competition to what they're trying to accomplish. Now, I don't keep up with Algorand, right? It's not something that I'm like super closely following. So I don't know exactly what use cases they're going after. But if Algorand goes after specific use cases for why their approach to quantum resistance and security and so on are important, then they will be able to have a moat for themselves, right? But they have to have some sort of an actual reason why a specific use case for that chain would be used for it to be super meaningful to me. Now, the thing is that you guys know me, I'm all about this word right here. But they're talking about interoperability on Algorand, but I'm more concerned about interoperability across ecosystems. So, that's the one thing for me about any particular blockchain itself. There's a difference between a blockchain and a token. The token doesn't have to necessarily have anything to do with the blockchain. Think about Chainlink. Chainlink doesn't have a blockchain. Okay, I'm just giving y'all a little bit of the thing. So therefore, I don't have to bet on any particular chain being used for any particular use case. It's like it's a really tough thing in blockchain. It's like you're betting on the company, you're betting on the company and the foundation and the people being able to build the technology. You're betting on people wanting to use that technology. You're betting that all of that goes to the accrual of the value of the token, right? All of those things have to happen for you to make the bet on that token winning. Whereas if you're just talking about interoperability protocols that have a token, the only thing you're really trying to figure out, you have less of a concern about whether or not people are going to use it because everyone needs it. Everyone needs Chainlink. Everyone needs it. Everyone needs value to get onto their chain. They need data to get onto their chain. And everyone needs value from the traditional world on chain and from the chain world to the traditional world. And you also need interoperability across all of these different ecosystems. And Chainlink, with their cross-chain interoperability protocol, answers all of those things at one time. So for me, right, when it comes to a specific chain, I'm always just like, I just understand that it's way harder, right, for everything that you need to work out as far as from an investment perspective. And then, what was the other thing I was going to say? Okay, so the only thing that I have to bet on with Chainlink, I don't have to worry about if people are going to use it or not. If people are going to use it, it's being used. The question now becomes, is the value of that going to accrue to the token? But with the other things, when I'm picking a chain, I got to figure out all these other things as well, right? Cool. So that's my take on Algorand from the little bit that I know. I really appreciate that super chat. That's really, really nice of you. I really appreciate it. We had another one. You just said thank you. The Grieving Model 6416 said thank you. Well, thank you. I really appreciate that. I really do. Is Moltbook actually real? So, I like the question. So the concerns around Moltbook are not real. Like the concern of like, oh my God, these agents are talking to each other. And look, I'm not an expert either, so I'm not going to claim to be. But from what I hear, that whole thing of like the agents are creating their own languages with each other, like I think it's a lot more surface level than that. I think what's really happening is that you have us humans that are programming their bots to, for instance, create a conversation like that for everyone to see. Okay, it's a very different situation from these agents are actually going in the back end and creating some language and talking to each other and doing something, right? Moltbook is a communication platform. It's not a execution platform, from what I understand as well. Like I also know very little. I'm only listening to the people that do spend their time in this space, and they're saying, look, this isn't that. It's not like these agents are going to like build their own systems and connect, like servers to each other and start work. Like it's much less of that and more of just there's people that are programming bots to have conversations, and those conversations are these spooky looking things because that's fun, because that generates the buzz. Someone said, Bill Rink said, make sure to set up your CrowdStrike. If you use OpenClaw, it can get out of hand. So that's actually so wild. I feel so out of the loop, man. I know CrowdStrike is a cybersecurity company, or like a not even just cybersecurity. I think they are like a hosting platform. It's a leading cybersecurity company specializing in cloud native endpoint protection, threat intelligence, and attack response. So I wish I knew more, man. I hate that I don't actually know that kind of stuff. Like I've never used CrowdStrike for anything. Man, yeah, this is a world that I'm honestly, unfortunately, so far away from, and I need to get deeper into it. But thank you for the warning to everyone. Let's see. What something screams like fear mongering? Let's see. Someone said this screams like fear mongering. I hope you will expand on exactly what you mean there. And Yvonne said, I was hoping you were going to mention Algorand's involvement with the U.S. military. Yeah, see, this isn't something that I'm familiar with, but I can look at it. Appreciate the super chat once again. Algorand is used in U.S. military-related supply chain initiatives, specifically through a partnership with Vera TX to tokenize and track aircraft parts for the Air Force, Army, and Navy. This partnership utilizes Algorand's blockchain for a secure digital marketplace for manufacturing and managing aerospace components. Is that the specific thing that you were talking about? This guy immediately says they're not choosing a single blockchain. It's building multi-layer defense architecture using different. The two most important are Constellation and Algorand. I'm very familiar with Constellation. Okay, so that's cool. Has been used since 2020 by the Department of Defense as well. So that's important. Definitely always worth paying attention to, right? Because that's that specific use case kind of a thing that I'm talking about, right? Like, where are they building in where there's a specific need for their approach? And if it's in military use cases, Department of Defense use cases, then that's that thing, right? So then now you have a reason to choose a chain, right? And this is just a philosophical thing. I'm not saying this has to be the answer. It has to be right. But now you have a reason to choose a chain because you also believe in the future of Department of Defense. And you believe in the future of the Department of Defense to utilize these kinds of technologies, right? And it's not just, oh, I like this chain, right? Or they've got cool, like, how would I say, like, theoretical use cases. No, there is a stamp of saying this is a use case for this technology and the United States government is using it, right? That's always something that's really, really cool to see, because they've got people that are spending a lot more time thinking about resilience of these systems, mission critical use cases of these systems, and other things that would be much harder for me to be able to. Yeah, I'm sorry. I don't know about crowd, guys. I'm not that deep into the tech. The most things I've ever done is like set up a little cloud server and SSH into it. Bill Ring said, who are the builders here? What agents do you use? Let us know. Okay, let's see. All right, folks. All right, folks. What y'all got for me? Hit that like button and subscribe. Hit that like button and subscribe if you haven't already. I mean, my brother, much love from NYC. Much love, Josh Wood. Nemo, what are my thoughts on Cardano? I like Cardano's consensus mechanism. I like that they've taken a very, how would I say that? The word is a academic approach to their consensus mechanism. And in that, have also thought about ways to keep there from being how would you say? Okay, so one of the biggest problems that I see with most consensus mechanisms is they usually lead to some sort of a concentration of power very natively, actively, obviously in the system. I think from what I understand from Cardano, and I'd have to look at their proof of stake again, I'll obviously be looking at it over the weekend before Tuesday. There's ways where the power kind of gets limited, right? Just having more doesn't lead to you just being bigger and more powerful in the system. And I always think that it's good to have limits like that for the consensus side of the system. I also like that Cardano has taken an approach, once again, of taking their time to really think these things through. And then you've got projects like Midnight that are being built adjacent to it. And I like Midnight a lot, based upon the conversation that we had with the leader of Midnight Foundation over here on Memes and Markets. In case you missed it, we actually talked to Fahmy over here, how privacy crypto can solve financial surveillance and online privacy. Okay, so that was a really good episode. And be sure to hit the link in the description to go and subscribe to Memes and Markets if you haven't already. I know there's almost 1,000 of you here, and I know all 1,000 of you have not subscribed to Memes and Markets, but this is where all of the value is going to be coming. It's going to be coming out of memes and markets. So if you're not subscribed there, you're missing up. And all you got to do is literally go to the description of this video. I'm going to show you right now. Go to the description of this video, click this, and you can see right here where it says subscribe to memes and markets. Click on that button. And right now it's being weird with me. But when you click it, it's going to take you to memes and markets, and you should go and click that subscribe button once you do. And if not, just type in memes and markets in the search bar and you'll find us. All right. All right. I really appreciate your super chats. Yvonne is how I'm reading that. Hope that's the right pronunciation. Bad Red, you're the GOAT, bro. You're the GOAT. You're the GOAT. Oh, Pastor Blackwood, Tuesday. You know, I don't know if I'm supposed to. Ben might get mad at me for telling y'all. But Tuesday, we're having on Charles. We're having the Charles on memes, guys. So go and subscribe. Nemo said, yeah, I agree. Midnight is great. I'll have to check out that episode. Yeah, check it out. Check it out. It was really fun. And it's awesome to be able to bring these conversations to you guys. And when you show up live on Memes and Markets, you get to participate in the conversation. Like, that's the value of this. Like, if you're there on Tuesday, you're going to be able to ask questions to Charles, right? If you guys play nice and you know, ask good questions, we'll bring them up and we'll have that conversation. And that's the beauty of Memes and Markets. It's a very, very, very cool thing. Okay. All right. What will people use stable coins for in the next 5 years and why? Cross-border payments is the obvious, easy answer. The other answer is going to be agentic commerce, right? Because you have programmability, right? I can set parameters of when this happens, then execute this, right? And you can kind of do that, right, with a regular tech system, right? But the problem is that you're relying on a lot of different infrastructure to make that work. Everybody has to then have their own application that does this. And you instead can have a blockchain that serves as a layer for where an application that anyone can use, right, exists to settle that same function. So you have decentralized applications that you can use, you know, like money has become software through stable coins. And that's something that doesn't exist natively when you're having to deal with the banking system. You have to create different systems on top of the banking system, and then they have to communicate with each other, and then they have to settle, they have to clear and settle. And when you just have a blockchain, that's all done at one time. And that's why you can use agentic, you can use it in AIs, because now these AI agents can just be doing stuff based upon events that are happening either in the environment that they're in or based on things that are happening in the real world when you have data being imported to the chain through something like a chain link. Hopefully that answered the question. You know what would really be nice is if Keith would combine his economic subject expertise with Bitcoin updates. He never opines about Bitcoin. Thanks for that, Kathleen. I work it in when I can. I try to work it in. It's usually like Bitcoin's going up or Bitcoin's going down. You know, there's not really usually too much else to say about it. And the developments that are happening around it as well and the adoption of it. You know, Benjamin Cowan, he's really good at keeping people updated on Bitcoin. I think he's awesome with that and what's going on in the markets and whatnot. I know a lot of you guys watch him. I mean, he's spectacular. I got to meet him once. He's really cool. Oh my goodness. Another super chat. What if the stablecoin bet fails? Then what happens or will be a thing with US force citizens to convert to it? I don't know what you mean by the stablecoin bet, but stablecoins could be something that are used to they could be used in a way to essentially force adoption of cryptocurrency upon people, without a doubt. If it's $1, it's $1, right? And if you need dollars, then you'll spend them and you'll use them. So I Defend You said, What are you doing with your money at the moment? What is your general outlook on Ethereum and silver specifically? Guys, I don't really like do a whole lot with my money. So I trade in the futures market. Okay. And I dollar cost average into things that I believe in. So, I'm never really doing anything all that fancy for the most part. The profits that I make from the futures market when I make them, which isn't all the time, I'm moving that into like very safe things like the NASDAQ and the S&P 500. Yeah. So, what is your general outlook on Ethereum and silver specifically? Ethereum. So someone was also bringing this up the other day. It's like Ethereum, or excuse me, gold is kind of like Bitcoin over the metals market. This is kind of what I'm saying is not relevant, but it is in a way, right? If gold's doing well, then everything else in the metals market has a potential to do well. Why? Because gold has both a useful aspect and it has a currency, monetary kind of use. I kind of look at Bitcoin in the same way. It's like Bitcoin has an actual use in the terms of it is a decentralized network that can be used to send money and communicate messages across the world without any intermediary. But it also has a monetary kind of use case where you try to use it as a hedge against the financial system. So point being is that Ethereum is only going to do as well as Bitcoin is going to do. And right now, Bitcoin's not doing too well. I think that the long-term prospects for Ethereum are probably very good. If you look at the fact that you've got really good retail use cases that are going to be built on top of it regarding things like what BitMine is doing with what's his name? Mr. Beast. And when you consider the institutional adoption of Ethereum. Now, I always had the concern of Ethereum fees being really high and the consensus mechanism not really being all that great. And that's both from the perspective of the proof of stake and the proof of work version of it. Neither of them really solved a lot of the issues that you had with the chain. But I mean, people are building on it. They continue to build on it. And there's a reason why people continue to build on it. And you really can't ignore that. And so that's something that about Tom Lee's approach to all of this that I've kind of realized, like, I can't keep ignoring that there are actual things being built on Ethereum. I think what you also have to watch out for is that there's L2s that a lot of people are using. I think that's a crazy thing to do, to build on top of an L2 on Ethereum, unless it's your own, the way that Coinbase did it, right? Like that would made sense to me. But relying on another L2 that someone else is having to develop and build on is like a kind of crazy thing to me. It's a lot of platform risk when you're already on another platform of Ethereum itself. But anyways, Ethereum, I think, is a place where long term, it should be something that accrues value to the token, but you've got to also look at the tokenomics model regarding the that's crazy that link doesn't work. That's crazy. You also have to keep into account that it might take time. So let me see here. Silver. You said thoughts on silver specifically. Silver specifically, I'm not as confident on because it's just a market that I don't know anything about, right? From what I do understand, there have been deficits of silver in the past few years, right? So there's more silver being demanded than what's being taken out of the ground. But the problem with that is that, once again, I simply don't actually have the wisdom on the silver market, right? That's crazy, y'all. That means that memes and markets link hasn't worked for a long time. That memes and markets link has been fixed. If you click that link in the description, it's going to take you to memes and markets. All right, now it's going to take you there. But anyways, if you haven't already, just go and search up memes and markets. If you just search it up, you will find it. And that's for certain. So hopefully that answered your question there. That's what I'm doing with my money, and that's my outlook on Ethereum and silver. I really don't have anything that I can say about silver, I'm going to be honest. It's just not something that I spend a ton of time on or ever did. And so for me to come into it now and act like I have an idea, I don't think it's the right thing. So what we can say is that there were people in my community. I had an analyst in my community who was talking about how silver was going to follow gold way back. Let's see, where were we? It was in like July, maybe, or not July. It was more like August, September. So back here, he was like, yo, this is going to follow gold. So pay attention. And bang, huge rise. So it follows gold. That's the only thing I can really say about it. So if you're watching gold and you're seeing gold pull up, again, if you see another leg up for gold and silver hasn't made that move yet, then you might be able to anticipate that that could be what comes next. All right. Yeah, thank you guys for the super chat. I really appreciate that. I defend you. That's really nice. All right. All right, folks, I'm going to have to call it. I do enjoy doing these, and I will definitely be there next week for this. But I will also say that if you haven't already, you gotta subscribe to Memes and Markets, y'all. I'm telling you, the link is now updated in the bio. And if it's still not working for you, just type in Memes and Markets and go and subscribe. It's a really, really good show. It's so much fun. We have some crazy guests coming on this week and in the future as well. And we also just have an amazing time where you guys get to come in and converse with us and really have a good time. It's much more easier when we've got a whole crew together to look at the stream comments and to participate in all of that. So definitely pull up to Memes and Markets. But with that being said, if you got anything from this at all whatsoever, be sure to hit that like button and subscribe. And until next time,